John, we've just gotten the minutes. We heard from the Fed that they did see modest further progress toward 2% inflation in June. They emphasized it would not be appropriate to lower the target rate until they had greater confidence that inflation was moving toward 2%. Some of that is what we saw in the statement. It's what we've heard from Chair Powell. Most see the policy rate as restrictive, but there was some debate and some uncertainty over just how restrictive rates are. Fed also said employment and inflation goals are now in better balance, leaving monetary policy, quote, well positioned to deal with risks and uncertainties. They said they're prepared to adjust policy if risks emerge or in response to unexpected economic weakness. When we look at the outlook a little bit on the inflation outlook, several participants said if inflation persists or rises, the Fed may need to raise rates further. The Fed also observed longer-term inflation expectations remaining well anchored, so they say that underpinned disinflation. They think that's still moving forward. On economic growth in the outlook, a majority viewed economic growth as gradually cooling. Many participants saw the rise in credit card use and delinquency rates as a, quote, significant concern. A few saw fragility in commercial real estate as a downside risk to economic activity. On the labor market, some interesting debate here. The Fed saw reduced tightness in the labor market. They listed decline in job openings, a lower quits rate, reduced hiring, and slower wage growth. Several participants emphasized that further weakening in the labor market could actually lead to higher unemployment, and they say that that's in contrast to in the past when we've just seen reduced job openings over the past couple of years. Some participants said the labor market would need careful monitoring now that the dual mandate is back in better balance. But participants generally believed that further gradual labor market cooling may be required before they have that confidence to cut rates. John, back over to you.